With Bitcoin breaking out above 7,000 as equity markets push to the upside, we're going to be looking at Bitcoin's technical analysis to see whether or not this descending triangle is going to come into play, and we are going to break down to the downside or not, alongside with what the upside targets may potentially be. As you can see here with this technical analysis, we've also got the 50-day moving average now acting as support. And so whether or not this is significant, we're going to look at some fundamentals alongside some technicals. And interestingly enough, you can see the head and shoulder pattern has also not yet played out, but is still in formation. As you can see with this right shoulder still below this head. And then of course, when we look at gold, the head and shoulder that we were watching has already played out, but gold being an $11 trillion market and Bitcoin being a $100 billion market, there is a lot of room for manipulation in the cryptocurrency market versus traditional precious metal markets, even commodities and equity markets alongside that. And so we're going to look at what a head and shoulder pattern is, what a failed head and shoulder pattern looks like, and then of course go through some other headlines, including 20 million unemployment claims in the last month and how that looks in comparison to other recessions. And interestingly enough, I know we talked about equity markets seeing further upside. Of course, we broke up to the upside on Friday and ended with some major gains, over 700 points added to the Dow Jones Industrial. However, I'm going to talk about why I believe we may have potentially topped here and why that's going to be significant for Bitcoin as gold sees its correction and then potentially recorrelates itself with Bitcoin. So first and foremost, I want to look at this technical analysis and point out this descending triangle, which is a bearish pattern that's currently forming. I see we've got Otto, Raphael, Hector, and Turd on the live stream. Good to have you guys on YouTube. We've got some viewers on Twitter and Facebook as well. Make sure to like this video if you guys appreciate this content, and turn on your post notifications to ensure you get notified when we make a new video every Monday, Wednesday, and Friday. But first and foremost, you can see this previous support here inside of this blue has now become resistance once and resistance twice. And of course, you've got a little bit of extra here. I would just consider that noise on the chart. Of course, we've got these wicks printing the resistance levels, and knowing that we have yet to go above this area of 7,400, we are still inside of this head and shoulder pattern. And the reason that's the case is because of the fact that we've yet to break above this head, but we are still in two bearish formations. But there is a potential bearish a bullish picture here that we have yet to talk about, and I want to bring that up here for you guys. If you look at this chart here, you can see if we look at Bitcoin in the potential bullish scenario, there is a possibility that we do play out inside of this bear flag, since we are above that 50-day moving average towards this $8,000 level, and we're still going to be in a bearish formation. So realize that, of course, we've got a head and shoulder forming, and head and shoulders 85% of the time play out to the downside. But let's say it doesn't play out, and that 15% chance that's still there plays out where we go bullish. We're going to break up to the upside, possibly towards that $8,000 level, but then we're still going to be in this bearish formation. And interestingly enough, when we look at the Dow Jones Industrial, we're currently in that same bear flag formation. And of course, if you looked at oil, it plunged today down below $19 a barrel. And we know when oil plunges, typically the market follows, but we're seeing an exuberance of excitement with investors. Really, it's being led by all of the tech. And honestly, it's the biggest players like Amazon and Walmart seeing all new highs, Costco, of course, and some other players like Netflix that are leading the charge. But the small caps in the market, in equity markets, are not doing so well. And if we look at the small caps, the Russell 2000 here, which is a very good forward indicator, it's one of my favorite leading indicators for the stock market, you can see we're struggling to even get near that 50-day moving average. So this is looking at the 2,000 companies that are in the public stock market that aren't Amazon, Microsoft, and some of these behemoths that, of course, are seeing major liquidity come in as we are all in a lockdown and in quarantine, but people are still shopping on Amazon, people are still using Netflix. But what about the small caps? What about the 2000? What about the companies that actually are the backbone of the US economy, right? So realize that the Russell 2000 not showing so many positive signs for the future of where we're headed. Of course, when we look at the Qs here, this is the big tech stocks. We're above all moving averages. And so what's really holding the stock market up, and it's what I talked about on Wednesday, is these tech players. But at the end of the day, we need the small caps to follow. So we're either going to be dragged by the neck by these tech stocks, or these smaller players, the Russell 2000 is going to bring everything back down. And I think that's going to be the case. As we know, the fundamentals are still there, and we are seeing record unemployment numbers. You can see another 5 million plus printed on the chart for the last 4 weeks, over 20 million in unemployment. And the last time that happened, as you can see, when we look at this chart here, unemployment is a good indicator of a recession. And never before have we seen a spike like what we're seeing right now since the Great Recession of 2008, and then of course the dot-com bubble. And right now we're seeing that spike. And this is only accounting for March 2020 numbers at 4.4%. But in reality, if we were to consider the amount of jobless claims that have been filed over the last 4 weeks, we're looking at a potential 10 to 15% unemployment number. And remember, during the Great Depression, we saw a record low unemployment rate in 1929 that by 1934 soared above 25%, but it took time. This is happening in less than 4 weeks. So interestingly enough, as Ray Dalio has been talking about, he is saying that we are in a recession a lot like what we saw during the Great Depression in 1929. And so what I decided to do was I took the Dow Jones Industrial, we're looking at the futures chart here, and I wanted to compare this to how the 1929 correction looked, because as you can see here, we're seeing something very similar. I've got the Fibonacci retracement pulled up here, and I'm not sure why it's not showing the actual retracement numbers, but you can see right here is the 0.5 correction area. Let me see if I can actually pull this up for you with the numbers, because it should show the numbers. There you go. So if we were to look at this with the numbers, you can see here, right above that 0.5 is where we initially saw the top, and then we saw over a 90% decline in the equity markets. Why is this important? Well, if Ray Dalio, one of the smartest hedge fund managers in the world, he runs and is the co-chairman currently of Bridgewater Associates. He's been doing this since his teenage years. If he's saying that we're in something very close and similar to the Great Depression, then why not look at the Great Depression's chart? Interestingly enough, what we see here is we saw an initial drop of about 50%, and then we saw a push back up to the upside of around 53% before continued downside. And when we look at what's happening right now, very similarly, you can see here we saw an initial push, and that was about 38%, and now we've seen a bounce of right around 34%. So right around the same number that we've came down, we've come up. Of course, it doesn't look the same in regards of candles, because it's easier to go down than it is to go up. If you lose 10% on a trade, it's going to take more than 10% to recover the same amount of capital. And that's why you see we're only about halfway there when we look at market structure. But what I find most interesting is the fact that when we look at the fib numbers, you can see it's at the exact same area that we topped out in 1930, where we're right above that 0.5 on the Fibonacci, that 50% retracement. And even interestingly enough, if we were to calculate how far above we went, you can see we're about 2 to 3% above where that's at. And when we look at 1929 and how that correction occurred, the same Fibonacci retracement, and you can see about 2 to 3% above the 50% correction range is where we topped out before seeing further downside. And then we have this 200-day moving average in 1929 acting as resistance. And interestingly enough, we've got the 50-day moving average acting as resistance today. And so has the stock market topped out or not? I think that's a big question. And I think this weekend into next week is going to be crucial for us to realize where is Bitcoin headed, where is gold headed, and where are equities headed. And so if you guys agree with this analysis that we've topped out in the Dow Jones Industrial, which is going to leak into every other major indice, say something in the chat, say I in the chat, or leave your opinion. And Sean says, you are the man, Naeem. Props, great points. Thank you so much. I wanted to make sure I went through that analysis. But back to Bitcoin. So we're in a descending triangle. I talked about equity markets seeing further upside on Wednesday. We saw that. I talked about gold playing out with the head and shoulder, seeing a breakdown. Of course, we saw that, right? Now, the one thing that we did talk about that has yet to play out is Bitcoin's head and shoulder and Bitcoin seeing downside below 6,000, right? We did see Bitcoin drop down to around 6,400, but we didn't see the head and shoulder completely play out. So you can see here, we've still got that head and shoulder in play here for Bitcoin. Now, this is the one that we talked about on Wednesday for gold. The head and shoulder did play out. We're heading down towards this major support area, which was previous resistance of around 1650. And from there, we're going to see what the fate of gold is going to be. I believe gold is still in a very bullish pattern in the macro, and we're going to continue to see upside and potentially see new highs leading into the Q3 and Q4 of 2020, because what I believe is going to happen in the stock market is what I just showed you, that we're going to top out, we're going to see new lows, and therefore liquidity right now might escape gold in retreat of US dollars, right? Like we saw initially with the liquidity crisis. And then the cash is going to stay on the side to see, okay, are the equity markets going to continue up or not? Equity markets are going to decide for themselves. We saw the Russell 2000. Equity markets will potentially say, no, we're not going to continue up. We're going to see another low. And then guess what? More liquidity and capital is going to flow out of equity markets into gold as a safe haven asset. And just like how Bitcoin initially decoupled with the S&P 500 when we saw Bitcoin bottom out on March 12th while the equity markets bottomed out on March 24th, I think the same thing is going to happen where Bitcoin is going to initially see downside along with the equity markets. Because interestingly enough, if you look at charts, I didn't pull this one up, but we could pull this up. Bitcoin, it likes to go down with the S&P 500, but it doesn't like to go up with it. At least it's been like that for the last month or so. Have you guys realized that? Like when the S&P 500 skyrockets, Bitcoin doesn't. But then when it dumps, Bitcoin does. It likes to go down with it, but it doesn't like to go up with it, at least in the way that it's correlating with the S&P 500 right now. Have you noticed that? So I think what's going to happen is we're eventually going to see it decouple. We're going to see the halving or the halving come in less than 30 days. And so the supply gets cut in half, and we're going to see price levels dip down at first. I think this descending triangle is going to come to play. And interestingly enough, I've got some more data for you that's very, very interesting. It's actually unreleased data that you can't really find on blockchain.com, because you can see hash rate looks all good and normal, right? Well, guess what? I did some more research today, and I looked at what the hash rate is today, and guess what? We saw a huge plunge down in hash rate. So that's going to reflect on this chart in the next few days. But the issue with this chart is right now we're only seeing up to April 16th. But when we look at this chart, we're seeing today. And interestingly enough, we're down below 110. And when we look at where that is on this chart, you can see 110 puts us way down here. It's something that we have yet to see with hash rate. So what does that mean? That there's an unexpected drop in hash rate right now. Is this the minor capitation happening as we speak? Who knows? Could possibly be. But we know there's a big correlation with hash rate and price. Interestingly enough, the same way I said the S&P 500 was going up and Bitcoin wasn't, well, guess what? Hash rate's almost back to where it was when Bitcoin was above 7,500, 8,000. Why isn't Bitcoin's price breaking the major resistance here? I think it was a great way for the whales to say, okay, everyone wants to go short right now because there's an obvious head and shoulder. We've got this 50-day moving average right now acting as resistance. Well, perfect time to play trickster and company and say, well, we're not going to go down. We're going to go a little bit higher, right? But guess what? They only went high enough to complete this descending triangle, and there's still resistance here in play, and that head and shoulder pattern clearly defined with this extra candle that's up here that doesn't need to be there but is there. Therefore, in my opinion, validates this head and shoulder is still in play. As you can see by what a head and shoulder actually looks like, it doesn't matter if this is a wick or not, it's still a head and shoulder, right? If it is a failed head and shoulder, which 85% of the time the head and shoulder does come down to the downside, then it's going to look something like this where we see upside. I don't think that's going to be the case. And the reason I say that is they brought price up. And by the way, still very low volume, but they brought price up. They couldn't break this ascending or this descending resistance level that we've been talking about since Wednesday inside of this descending triangle, which is also a bearish pattern. So the upside is potentially there, and if it does come, it's going to look like this. We're going to see the 100 and 200-day moving average act as resistance at around 8,000, but guess what? We're still in a bearish pattern. And so I think what's going to happen is we're going to see some sideways action throughout the weekend, right? We love to see manipulation during the weekend because the equity markets are closed, future markets are closed. There's complete manipulation in the markets, right? And so we see the manipulation, we see sideways price action. We'll probably stay above this 50-day moving average. We might come down, touch this, and then we find out, okay, Monday hits, and now it's time for the equity markets to come to an ultimatum. Are you going to drop or not? And that's the ultimatum we need to come to, because you can see we're in this bearish wedge. Once again, 85% of the time, this breaks to the downside. We're in this bearish wedge right now. And of course, like I just mentioned, a lot of similarities to 1929 and right now, where we top out at the 50% retracement and then we see a continued downward move. Is that going to happen on Monday? Well, if it does happen, I think that's when Bitcoin is going to decide to go ahead and drop after it's already cleared shorts. But of course, there is that possibility that we stay inside of this falling wedge if the equity markets decide to still play around. And of course, we can still potentially go to that 8,000 because now all puzzle pieces are on the table since we're above that 50-day moving average, right? So understand that it's going to be interesting to see what happens over the next few days, but it's crucial to see what happens because it's going to determine where the future is headed. And as I've mentioned multiple times over the last few weeks, I believe we're going to come down. For Bitcoin, at least we'll come down to that 200-week moving average, and that's going to be right around that 5650 level, and that's where I'm ready to enter some larger swing trade positions right at that level because, of course, when we look at this 4-hour chart, you can see we've already double bottomed at this level here. When we look here, we double bottomed here, and then, of course, everything below that was an obvious accumulation zone. And then when we look at macro structure, which I don't have drawn out on this chart because it's just not as significant, you can see we've got major support down in this level, and that's shown very clearly with the amount of buy volume with these peak troughs forming on these peak volume levels with buyers. So realize that anything below this 200-week moving average we know is a strong point. But you can see Bitcoin right now showing a lot of price action, still low volume. It's going to play around with us. Don't be afraid and don't be scared when we see Bitcoin maybe break through 7,300. So I think really the price action and the price level to watch right now is going to be that $7,300 level. If we're able to break through, what ends up happening is we invalidate the head and shoulder because at that point we're most likely, I mean, really the invalidation is when we go above 74.85 on this Gemini chart. But understand that even if we break that 72.75 level, that's when things can get interesting because now this descending triangle invalidates itself, the head and shoulder potentially invalidates itself, and then we're stuck with this falling wedge, and this falling wedge is what we'll have to wait and see. Will it play out or not? And most likely will, but I just don't believe we're going to get to that point. And if we do, I think that that's going to be an interesting thing for equity markets because that assumes that equity markets continue to see upside. I don't think that that's possible with unemployment numbers at 20 million jobless claims. And of course, we looked at those charts and it just doesn't make sense to me, right? So Edit says, this is literally contrarian thinking. Everyone is bullish right now. Tiber says, what about the channel we dipped back into after the crash? Which channel are you talking about? Maybe post it on our Discord. Mr. Mystery says, with the Fed basically propping up the whole economy, is it possible that we don't see a drop for 3 to 6 months despite all the bad news for Main Street? Well, understand, they're not going to sit here and buy stocks. They're buying bonds. They're buying junk bonds, right? They're buying treasury bills. They're not buying stocks up. And they can only do so much quantitative easing. But they've done this before. They've done this many times in the past. And the point is the two factors that were driving the equity markets over the last 10 years were dividends and buybacks. Dividends are 26% down, at least in projection, for the next quarter. So about 26% of companies that used to pay out dividends aren't going to pay them out anymore due to cash flow and balance sheet issues. On top of that, we look at buybacks. All of these companies getting bailed out like Boeing, Delta, American Airlines, United Airlines. No more buybacks. Well, when companies stop buying back their shares, those are the two things that were driving the bull market over the last 10 years. That's out the window. So is it possible for the Feds to just continue pumping money into the market? Yes, it's possible. Is it going to allow markets to see new highs? Well, probably not, because they can't just buy stock ETFs and put money into major indices, right? They can buy other things up, but even those things are still not performing well with the quantitative easing. So, they have to be careful with how they do this. But, the interesting thing right now is when it comes to equity markets, it's tech leading the way. So one of my favorite leading indicators are the IWM, the DJTQQQ, SMH, and the XLF, right? They're all different sectors of the stock market. So it's good to look at the different sectors. When we look at the Qs, this is tech. This is Microsoft. This is Amazon. This is the big tech companies. These are the ones driving the market up right now. The problem with that is we're leaving the small cap 2000s down here, and they're not seeing any upside. They're seeing no liquidity, still below all their moving averages, right? These small caps are crucial to the U.S. economy. If these small caps cannot see upside, there's a big issue, right? So we look at the Qs, that's leading the bull charge forward right now. But then you look at transportation, also struggling, right? So people are saying, okay, well, the airlines, these transportation stocks, they're not doing well. That shows us something, right? You can see a lot of sell pressure right now. So that's also not doing well, just like the Russell 2000. What is also doing well along with the Qs, the tech stocks? Well, the semiconductors, right? It's part of tech. So they're doing quite well, not as well as tech, but they are doing quite well. Now we look at the financials, crucial to our market, right? The financials, Bank of America, JP Morgan Chase, not doing so well. So we've got transportation, we've got the small cap 2000, and we've got financials not doing so well, looking very bearish, still very, very below their 50-day moving average. They're really just being pulled by the neck by these tech stocks. But then we look at Amazon. Oh, new highs. Netflix, new highs. Well, what happens when there's 20 million people unemployed and demand goes down? Interestingly enough, it's funny you guys mentioned that. Check this out. Go on google.com/trends and let's see, all right, is Amazon really doing that well that it needs to see new highs? Because you look at Amazon stock right now and you're almost like, okay, well, is this the next Bitcoin bull run? Or, is this the next Tesla? Like, what's going on here, right? Well, no, what's happening is we're seeing a big pump in tech, and people are going to, obviously, the people manipulating this market, it's like, well, why don't we go to the website that everyone shops from, Amazon, and let's manipulate that so we can at least prop the market up in some fashion, right? Because we always want to look at what the majority is doing and then get on the other side, right? Because it's called trickster and company, right? They come in and they trick us all, right? We get tricked and fooled. But you look at Google Trends, well, let's see, is Amazon really seeing a surge that is going to justify the stock going up that high? Let's see here. Nothing different to me. Look, Christmas was even more than it is now. There's more people searching Amazon during Christmas than they are right now, right? You want to get even deeper? Well, we can actually look at web traffic, right? Let's pull up the web traffic of Amazon. Is it justified to go this high, or is this manipulation to bring the tech stocks up, have the retail investors jump in? They're all getting their $1,200 checks right now, and then they steal your $1,200 by dropping and crashing the market. Well, that's definitely a possibility. That could also be what's happening with Bitcoin, right? But guess what? It didn't happen with gold. Gold's 11 trillion. Bitcoin's 100 billion. It's a lot easier to manipulate Bitcoin than it is to manipulate gold. So same thing with Bitcoin. Everyone's expecting the downside. We've got the 50-day moving average acting as resistance. We've got the head and shoulder forming. Oh, well, guess what? Let's bring it to the upside and clear these shorts out. If you guys are in our Discord, you know how many shorts were cleared out over the last 3 days. Lots of liquidations, lots of longs liquidated too. So realize this, at the end of the day, though, they didn't get to break that resistance level. And yes, we're above that 50-day moving average, but at the same time, we're still in a head and shoulder formation. So we've got to break that 72.75 level, and we've got to see some volume come in order for me to say we're bullish. If that doesn't happen, we're still bearish. And guess what? The most bullish case is still going to be bearish because we can go to 8,000, but we're still inside of a bear flag. Right? So back to Amazon. We look at Amazon. check this out. You look at the similar web report here. So this is going to show us web traffic, right? Let's see how much traffic Amazon has been getting. I think this is also pretty delayed. Oh, look, Christmas, even more than the traffic that it got in March 2020, right? So is Amazon stock justified at these highs? In my opinion, no. Yeah, you can argue that the customers that are on the website are probably buying more than they used to and all of this other stuff. But at the end of the day, lockdowns are probably going to be over by May 15th. If not, let's say June, whatever it is, things open up, demand goes away from Amazon. And guess what? Are these justified? Does Amazon going up justify 20 million people unemployed? Well, Amazon's only hiring 150,000 people right now. They're not hiring 20 million people. So to me, the leading indicator, my favorite right here, the IWM, the Russell 2000, we're looking at smaller companies and small caps. They're not doing well. And at the end of the day, like we just talked about, when we look at how the Dow Jones Industrial is reacting to all of this, we've got major resistance here at the 50-day moving average. We've yet to come above that. We're right at that 50% retracement, and we're just about 2.5% above that retracement. Oh, well, what do you know? What happened during the Great Depression where we saw similar unemployment rates, we saw similar quantitative easing measures? Oh, well, look at this. 50% correction, 2.5% above, moving average on the top, and we crash down even more, right? So we look at other leading indicators. I wouldn't use oil as a leading indicator, but we do know when oil drops, we typically see a drop in all other commodities, right? Well, guess what? Look at oil. New lows printed for the day, closing on Friday, below $19. So I don't know. I'm trying to be the umpire here, and to me, things are still looking quite bearish, right? So Sean says, thank you, Naeem, for saying what I was already thinking. This gives me more confirmation of my own opinion. You've cleared up a lot. That's my goal here. Majra on YouTube says, when the stocks went down in the Great Depression, how many months did it go down before it started going up? Well, we're looking at the Great Depression, 1929, record low unemployment rates. 2020, January, record low unemployment rates. Actually, 3.2% in January 2020. I think it was 3.1% in 1929. Great Depression hits. 1930, 15% unemployment rate. Right now, we're at about a 15% unemployment rate after after 4 weeks, right? Great Depression, 1931. We had 1938% unemployment rate. 1931, 15% unemployment rate. And then 1932 to 1934, above 25% unemployment. Right now, we're almost at 20% unemployment, and it hasn't been 4 weeks. So very similar to the Great Depression. How long did it last? Up until around 1934. We saw a 90% decline. I don't think that's going to happen now. Back then, our dollar was pegged to gold. There were a lot of different aspects to it. But right now, the similarities are there. And you listen to Ray Dalio, he sees this worse than 2008, than the dot-com bubble, and very similar to the Great Depression. And that's why it took me to that chart. So Steven on Twitter says, short Amazon. I'm actually, I actually shorted tech today. I didn't post that as a signal. I'm still determining whether I'm comfortable posting shorts on the stock market for our Discord group. Of course, we do our BitMEX shorts, and I'm still considering whether or not I want to do that because they are quite risky, especially in the stock market where it's typically going up, right? But there are times that you got to short, and it is what it is. I've been shorting oil for quite some time and some reverse ETFs. Madron says, if stores open because vaccine is found, will anything the unemployment go away? No, it's like a tsunami, right? So the tsunami hits, things don't just go back to normal, right? The tsunami is already hit. Things are not just going to go back to normal. Businesses and their balance sheets are hurt. Look at what's happening in China. They're having a struggle to reopen businesses. They've got a decline in their GDP, and that was released Thursday afternoon, and guess what? Market goes up on Friday for the U.S., right? Irrational. Everything, in my opinion, right now is manipulated, and this weekend into next week is going to be very crucial because they can only manipulate it so much. And the point is, right now, we're in a very, very bearish scenario and a bearish market structure where 85% of the time these flags break down to the downside. We've got that 50-day right on top there. Of course, with Bitcoin, it's a $100 billion market. It's easier to manipulate, but you can see here, we're not seeing much buy volume the way that we want to. So volume is starting to level out. In my opinion, it's going to bring some sellers. So Othman said, any expectations on when BTC and crypto markets decouple from stocks and traditional markets? I believe when we start to see the confirmation and a new bottom, I think that that's going to allow Bitcoin to bottom at that 200-week moving average around 56.50, and then it'll decouple, because that's what happened before. When Bitcoin went down to 39.90, the stock market kept going down, but Bitcoin said, whoa, I'm not going down that far, and it decoupled itself, right? And so that's why year to date we're higher in Bitcoin than equity markets, but at the end of the day, interestingly enough, when equity markets go down, Bitcoin is starting to go down, but it's not going up with equity markets. So it's showing us there's some definite sell pressure there on Bitcoin. And then, as I showed you guys, this chart that nobody can see, really see right now on the blockchain.com, it's showing that hash rate's at these new highs and everything's okay. But in reality, no. When we look at hash rate today, we saw a big dump in hash rate for the first time. We were trending up. We were forming these higher lows, higher lows, higher lows. First time we formed a lower low, and that is a potential start to a downtrend in hash rate, and we're less than 20 days from the halving. So is this the miner capitulation coming? Is this all the miners manipulating Bitcoin? Could possibly be, right? Everyone expects Bitcoin to go up during the halving. It goes down. Nothing new. Tricksters and co. comes back into play, right? So if you guys are appreciating this content, like the video, turn on your post notifications, and subscribe to our YouTube channel if you guys aren't already. I'm going to be wrapping up here soon, but I do want to mention this chart here. USDT balance on exchanges still seeing new highs, which means that there's a lot of money on the sidelines that have yet to enter the market, and that just printed a new high today again. And so realize that the real money has yet to come into Bitcoin, and I think it's going to be waiting for those lower price levels at 5,000 and 6,000 before they enter. Fear and greed index rising slowly to 18 right now, nothing crazy, but most importantly, we have to realize the fundamentals here, and the fact that we've got over 5 million reported jobless claims last week, and a total of over 20 million in the last 4 weeks. It's really looking like a recession is coming, and we're already in a recession. That's confirmed, but a depression is possibly right around the corner. As you can see, these highlighted periods are recessions. This is the start of something. Already a 4.4% confirmed on the books, but with the jobless claims factored in and the delay in these percentages, we're looking at a potential 10 to 15% unemployment already. And so Google just announced we're going to slow down our hiring for 2020. So from that question on YouTube earlier, oh, well, won't people just go back to work? No, not when there's 20 million unemployed and then companies are saying, oh, we're not going to hire as much. And then you've got companies with balance sheets that are over leveraged and they go out of business and they bankrupt themselves. That's not how things work. It's a tsunami, right? Oh, by the way, on my last video on Wednesday, I compared all of this to Hiroshima, but it was actually Fukushima in Japan, what I was talking about when I talked about the tsunami and how the nuclear reactors, they eventually lost control of them because the generators were under the water walls, and when the tsunami came, it broke those generators, and then of course the generators failed, and then the nuclear plant had nothing to regulate the temperature, and it was like a melting, or it was like a pot, a boiling pot, a pressure cooker, and then it blew up, obviously. And it's the same thing happening right now. We've got a tsunami in our global economy, and once the water comes away and the dust settles, we're going to see who's got their pants down, right? As Warren Buffett likes to say, when the tide goes down, you see who's got their pants on or not. And so if you guys are enjoying the content, I'll see you guys on the Discord. I'm going to wrap this up. It's Friday night. I don't want to take too much of your guys' time, but I hope you enjoyed this video. I hope you enjoyed the information here. And what's coming up in the next few days into next week is going to be crucial. I'll see you guys on Monday. Tiber says, emoji with a strong. Sean says, support and like. Thank you. Nice says, we're going up. We have that potential. There is that potential, remember. Eduardo says, I don't think they'll see a recession because Trump is our president. I think it might be the opposite. They might be trying to get him out through the recession, right? I actually posted on Twitter before we were still at all-time highs, and it was literally the next week that we saw the first drop. That I think that I'm not trying to be political here, but I did post that on my Instagram. If you guys aren't following me, it's at Naeem. I did post. I was like, I think the market's going to crash here real soon, and it might be because of the Democrats. At first, I thought it was going to be Bloomberg causing it because he's got so much connections in the market. He's already worth over 60 billion, probably less than that at this point. But I knew that something was going to happen. I had a feeling, right? It was already that 10 to 12 year cycle, as we've all talked about. Othman on YouTube says, any expectations on when BTC and crypto markets decouple from stocks? We answered that one. So other than that, I think we're pretty good here. Nick says silver is at a buy. I'm actually putting some liquidity in silver too. I like silver a lot. It's a great asset. I think gold and silver are great. I think being diversified is the best thing, right? Being diversified, gold, silver, and Bitcoin. Nothing wrong with silver. Alphamate says, thanks, Sam. I'll look for the new lows on BTC, so I'm watching the decoupling. Thanks for your answer, bro. Great content. Absolutely. Tiber says, see you in the Discord. All right, guys. Agile says, you don't think people are FOMOing in? Well, they all got their $1,200 checks, right? So we might see the FOMO, but that's exactly what the whales want, so they can pull it right out of you. Because if you've got enough to put it into the markets when you get that government stimulus, then there probably isn't an issue with them pulling it away from you, right? So always be careful and look at both sides of the equation. That's what we've done today. And so hope you guys enjoyed this. Until our next video, let's see. Trading View. Trader says, lost the live feed. Zeno Trading. I know it's hard to find new viewers. Good for you, man. Yeah, we just started streaming on Trading View, and I guess he's talking about that, but we've already got a pretty stable base on other platforms. So thank you, guys. Enjoy your weekend. My condolences and everything goes out to all of you guys quarantined and in lockdown right now. I hope you guys are surviving well and being healthy and being conscious and aware. And I hope you guys are informing others on what's happening right now with all this quantitative easing and with equity markets and how they're pumping, but not really. Make sure you inform those closest to you of what's actually happening, because the best thing you can do amongst all of this is to inform others. And so be careful with the markets over the weekend. We see higher manipulation than usual. And of course, next week is going to be crucial to see what's going to happen. So to wrap up, we've got this descending triangle. 85% of the time this plays out. We've got previous support, current resistance. We're still inside of this head and shoulder formation. As you can see here with Bitcoin, the right shoulder has not went above that head. Of course, when we look at this, we're still above that 50-day moving average, which is bullish in certain ways, but we're seeing more bearish patterns. You can see gold, which we talked about, seeing downside after it formed its head and shoulder, already broke to the downside, but it's a $1 trillion market. It's going to follow rules a lot easier than a $100 billion market like Bitcoin. And like I said, 85% of the time, these patterns play out. And so the best case I can give the bulls are we go up to 8,000 to the 100 and 200-day moving average, but we're still in a bear flag, and then we see new lows. So that's it for today. We'll see what happens on Monday, and I appreciate each and every one of you guys tuning in to our YouTube, Facebook, Twitter, our Twitch, and now our Trading View. And I'll see you all on the Discord. Sniper.